Business Matters.
New federal tax reforms are expected to benefit individuals and businesses by keeping more money in their pockets. But for the government, it will mean a big drop in revenues. Public Auditor Doris Flores Brooks explains in a recent Rotary Club meeting.
You're going to be remitting to the government of Guam smaller income tax withholdings to the government of Guam. Okay. So that effect is going to be felt very immediately. And here's how Guam operates. 1 week, last week was payroll, this week is bills. Next week is payroll, following week is bills. And it's that month, those with income tax withholdings that help us pay the payroll and the bills.
She says Guam faces a looming cash crunch and needs to move quickly to mitigate the impacts.
We have to take action in 2 areas. And I know businesses don't like to hear it, but revenues have got to increase. Gross receipts tax has got to increase. Expenditures also either flatten. Whether or not there is the political will to decrease is another area, but at least flatten. And then maybe we might be able to ride out this storm.
Speaking at a separate Rotary meeting, financial consultant Joe Arnett of Deloitte & Touche says Guam should look first at reeling in its spending.
Obviously, they need to take a look and prioritize things and, and spend the money on the things they said they would spend it on. What was the report this week we got from the public auditor that they didn't use barely use any of the money they took from us to build roads. So, the priorities is what I think they should stick with.
Arnett says government officials are already raising taxes, most recently the liquid fuels tax. He says there was also the increase in port fees, and now Senator Dennis Rodriguez is considering legislation to lift the business privilege tax exemption for wholesalers and other industries.
I think it just raises the cost to everyone. They talked about the wholesale exemption, saying prices have already gone up, and that's why they want to repeal the wholesale exemption. But I would tell you, my belief is they would have gone up a lot more without it, because you would have had another 4% on top of another 4%. And, I'm not sure about your family, but I wouldn't be excited about paying 4% more at retail.
And Tim Kernahan of wholesaler Dickerson & Quinn says the GRT exemption helps spur a local industry that's grown now to more than 600 companies, and ending the exemption could cost local jobs.
In my case, we grew from a company of about 12 people in the mid-'80s to over 100 people regionally now. So that employment base is very, very important. So we're going to be seeing our customers buy more and more product off-island. We're going to be favoring off-island vendors over our own local distribution community, and that's very dangerous.
But Brooks says something has to give. No amount of belt tightening by the government will likely be enough to offset the loss in tax revenues, and Kernahan agrees.
We all know the realities of Guam, and for significant cost cutting to take place, it's been tried, but it's very, very difficult in a community like ours. And so I think the business community understands that there has to be more revenue generated for Guam.
He suggests the most fair way to raise revenues is to eliminate the gross receipts tax altogether and replace it with an upfront sales tax.
That way the consumer is only taxed one time, and goods from distributors and goods from off-island vendors are treated exactly the same. There's no favoritism.
For KOAM's Business Matters, I'm Nestor Lecanto.
Business Matters.